let's start off with the fact that the big buzz yesterday in the US was that the recession could finally be over, and that's according to the NBER, which is a group of economists which makes official declarations about the beginnings and endings of the recession. Are you erring on the side of caution, or do you think that the recession could finally be over?
No, I think when the third quarter numbers come through, and that's what we're waiting, they do come out with a bit of a lag, we would expect those to be positive, particularly on a quarter-on-quarter basis when you compare the third quarter to the second quarter. And we'd expect that situation to prevail in most of the major developed economies, that actually in the third quarter things are starting to turn positive. I think Japan led the way, their second quarter was positive, but now we're looking in the second part, the latter part of the year, for positive growth and for those economies to come out of recession now.
Well, it's interesting that these economists say that the recession is finally over in the US, considering that there are still 15 million people which remain unemployed in the US, and of course unemployment is set to rise. Housing markets still under slight pressure. We are seeing those green shoots emerge from that sector, but again, it's all about optimism, and perhaps we are being too optimistic right now, and we've also got to take into consideration that the dollar has come under significant pressure.
There are a few risks, and some of those green shoots have faltered and wilted a little. If we look at that Chicago PMI, the Purchasing Managers Index that we got out a week or two ago, that came off a bit, and the recent non-farm payrolls number was also quite weak. But I think we're going to see those numbers start improving quite dramatically in this last quarter of the year. Those non-farm payrolls, we could think even turning positive before we get to the end of the year. So I think it's been a bit of a fit and start so far, but I think we're going to see a bit more momentum coming through. Obviously, as you say, the risks are still there, that things are a bit slower rather than a very fast improvement in growth and demand. But certainly it's going to be positive from here on out.
Well, let's just take a look at the dollar and the comments that we saw coming out recently from the IMF. And it seems that investors are going to the euro and the yen as alternative currencies. And there has been that major shift in terms of what the reserve currency of the world is. And we know that there's been a lot of debate about this as well. Do you think that this is going to definitely be a trend that's going to emerge and that's going to actually stay in a sustainable way?
I think the dollar will ebb and flow as the flavor of the day. Certainly the underlying current is to move out of the dollar, and that's what we have been seeing. We've been seeing central bankers from a lot of the major economies trying to shift out of the dollar into the likes of the euros you've mentioned, even into other types of commodities, just other kinds of assets, and moving away from the dollar. But I think a fair bit of the dollar weakness at the moment is also this aversion to risk that we've had starting to diminish. Investors looking to the rest of the world to deploy capital, taking it out of that safe haven of the dollar, out of US Treasuries. We've seen those yields rising, and just looking to deploy it elsewhere in the rest of the world. Emerging markets have benefited. We've benefited ourselves to some degree. I think equity purchases by foreigners over 60 billion this year so far. So certainly that diversification of assets out of the US dollar is what's hurting the currency at the moment.
And of course is what's helping the rand at this stage, the rand hitting 737 in yesterday's session.
Yes,
do you think the rand is going to sustain these gains? It's all about dollar weakness, isn't it?
It is, but I think the rand's got its own fundamental strength as well. Being an emerging market currency, I think being a commodity currency as well, we're benefiting from that front. As I mentioned as well, we've seen those inflows coming into the equity market in particular. The current account deficits come off quite dramatically, and we would expect it to stay in that 4 to 4.5%, 5% of GDP range in the foreseeable future, the next year, 18 months. So that could support a firmer currency going forward, and in the light of dollar weakness as well, we're holding up quite well.
Well, it's obviously hurting those resource companies. Do you think that the resource companies are going to be coming under significant pressure, despite the fact that we have seen resource prices hitting new highs?
Yes, I think there's a couple of elements to it. The demand certainly coming in for those commodities, the prices are going up. So in dollar terms, which all of those resource companies report in, we should see improving earnings going forward. So from that point of view, from a fundamental point of view, they look quite sound. But I think when you convert those, the prices of those commodity companies, which are all really listed offshore, their primary listings offshore, when you convert it to rands, we lose out a bit.
Retail sales set to be released tomorrow. What are you expecting?
Still a negative number, probably around 3.5%, not too much better than the number we've had before. But I think with a lot of the economic indicators we've seen lately, it's more about the very recent trends. So when we look on the last 3 months, compared that to the previous 3 months, we're starting to see some improvements. And maybe it's clasping at straws, I don't know. But I think we are seeing, positive moves coming through in those numbers.
It's a good time to buy those retail companies. We know that the cash retailers have been performing far better than the credit retailers, but we have seen a big shift into the more cyclical ones.
Yes, I think it's time to start looking at those credit retailers. Even the banks have had a good run, but I think those kinds of institutions like that should benefit from an improvement in demand in this lower interest rate environment we should be looking at.